SW podcast series, an initiative by SW India that brings global leaders' perspective and how the accounting and professional service industry is transforming. Across the world, accounting firms are being reshaped by AI and automation, changing talent expectation, private equity involvement, and growing demand for advisory and digital trust. These forces are changing how firms operate, how they serve clients, and how they define value in a global market. This episode is hosted by Kunal Mehra, who brings strong experience in audit and advisory and works closely with global clients. Joining him is Tom Watson, CEO of Forvis Mazars, a top 10 professional service firm with presence across the US and internationally. Tom has led major firm mergers and large scale transformation, giving him a front row view of this change. Together, they discuss what defines an accounting firm today and what the culture looks like globally. Let's begin.
Welcome, Tom. It's our honor for you joining us on podcast today. We look forward to speaking with you, and I'm sure the kind of professional journey, the success you have in your career is going to a lot of takeaways, which going to help our audience who are going to see or listen to our podcast. So maybe I think Tom,
No, I was
especially
going to say I
for
look forward to joining you and being on the show today.
thanks, Tom. Really appreciate it, and thank you again for that. So maybe I think, Tom, especially for the audience and people this part of the world who may not have heard a lot about you, although I have heard a lot about yourself being part of this. So maybe we can start with your introduction and your professional journey so far, so that and as I mentioned earlier, the kind of successful career you have, it will be a lot of learnings for you, especially for the young people.
Yeah, happy to. I'll give a little bit of background. So I currently serve as the CEO of Forvis Mazars in the US. Certainly had no idea that that would happen when I started my career as an intern nearly 35 years ago now. So I started with our firm in the city of Little Rock, Arkansas, which some of your viewers may remember President Bill Clinton. That was his home. So about the time that President Clinton was being elected, I was starting my career in Little Rock. I was on the audit side, so I ended up focusing mainly on our healthcare space. In the U.S., most of the healthcare system is private, either governmentally owned, nonprofit, or there are certainly some for-profit ones. So almost all of them have their own audits and their own regulatory needs. So I kind of cut my teeth as a client service leader on that. After a few years of working in Little Rock, I was able to make partner in the firm, and then ended up relocating to Houston, Texas, where we had a new presence. And the goal was to try to build a healthcare team in Texas. I worked in Houston for 6 years, so from 2004 to 2010. And at that point, I relocated to Dallas, Texas, where I live today. Now, today I'm coming to you from New York City. We have offices all over the U.S., but my home is in Dallas. And I moved to Dallas in 2010 to also help to grow a healthcare practice. But over time, I got the opportunity to get involved in our leadership of the firm. So I became a market leader of the Dallas, Fort Worth, and Waco practices, which are all in North Texas. After that, I became a regional leader over the Southwest region of our firm. And then in 2021, when our former CEO retired, a gentleman named Ted Dickman, I was asked by the board to take on the chief executive officer role, which was with BKD at the time. And then shortly after I took that role on, we created Forvis and then Forvis Mazars, and here we are. So it's a 35-year journey that I would never have predicted when I was graduating from college, but it's been one that has been terribly fulfilling, and I've really appreciative of the opportunities the firm and the profession has brought to me.
I think you had a successful career, and I hope the same continues in the future also and in your role also. And I think, Tom, as you mentioned, it has been 35 years, and I was also looking into when you started in careers. And when I saw that you started with BKD from the day one, say 1992, and still 35 years counting, one word came into my mind: wow, how can someone continue with one firm so long? So
I'm sorry, You cut out there real quick. Can you say that? Ask that question again,
So
Kunal?
I said, when I saw that you being part of the same firm for 35 years, I got a question, how is this possible? One guy can continue, especially the professional person, partner or CEO. I've seen in family-driven firms and all that, but so that's the question to me, how it has happened, how is possible also?
You know, one, you really can't go into it as with that as your plan, right? I mean, you just never know where options in your career will take you. But the thing that maybe I got lucky, but I figured out early on that I'm not going to make decisions before I have all the facts, and I'm not going to rule a particular future path out before I understand it. And in the US, sometimes you hear young accountants enter the profession, and the minute they walk in the door, they say, "I'm going to get my 2 years and leave." And my youngest son actually is a accountant and CPA. He just started with one of the big four firms, and he told me that one day when he was still in college, and his name is Jared. And I said, "Jared, well, why would you do that? Why would you make the decision now to leave the profession after only 2 years when you haven't even started yet?" And he goes, "Well, that's just what all the people say what we should do." I'm like, "Well, my advice to you is get in there and experience it. And then after 2 years, you don't think it's the right move, then go somewhere else. But if you're enjoying yourself, don't make yourself predestined to a particular outcome." And so as I've thought about my career, like I didn't enter the profession saying I want to be a partner. But I also didn't enter a profession saying I don't want to be. I didn't rule it in, I didn't rule it out, and I just let life come to me a little bit. And luckily, I found myself in a firm with a great culture, with a high degree of integrity, a firm that offered me tons of opportunity, that was able to recognize effort and help people be rewarded for what they accomplished. And I just never saw a compelling reason to leave. And I had lots of opportunities. I mean, all of us do, but I never could find an option that was better for me than the path I was on. And sometimes it just works out really well.
No, I think I think the kind definitely, as you mentioned about your son also, it has become, I think, the fashion. The more changes you make, the more successful it is. I think that's the thought process. Somehow it has curtailed into our profession, not in our profession. I think in our commercial world, I would say that's the path everyone thinks like that only. But I think you are right. You have to focus on your direction of the what you want to be there in terms of the learnings and the roles and everything, and then the outcome, the CEO outcome or the partner outcome is just a byproduct of that.
It is, no doubt.
So I think, Tom, one interesting point, which obviously I think, as you said, in your career, my career, always there will be a situation whether when say you have a better option offering from some other organization, or maybe you are not having that kind of good time, which or the things which you are not liking or to the best of your interest. So obviously it come across in every career, but still avoiding that and continuing this, what was the, if you can share the mindset at that time, what helped them to avoid that and continue this path?
Yeah, and Kunal, you cut out again, so I'm going to answer the question I think you asked, and if redirect me if you need
Sure,
to.
sure, sure.
So the one thing that I'll admit is, we hire a lot more people as starting accountants than what we eventually make partners. So there's oftentimes opportunities where people find positions that are just better for them. And my goal as a leader is to make people better because they were part of our organization. And if you choose to work with us for 2 years, then I want to make sure that you look back on your time with our firm and say, I am better because I spent 2 years at Forvis Mazars. It set me up for success going forward. And so I think it's awesome that we have, thousands of alumni in the US that have been part of our firm. And I hope they all look at their time here and say, you know what, the firm made me better. They helped me become my best self. They taught me a lot. And that's actually part of our overall employee value proposition that we've launched recently. I mean, if you think about a value proposition, you've got to pay people the right salary and give the right benefits. I mean, that's kind of table stakes. And then the next step is that how do you make them better? I mean, everybody can pay you a salary, but can everyone help you become a better professional, a better person? And so what we try to do is just create an environment where that happens. And then if someone decides that for whatever reason, their passion or their purpose lies somewhere else, then that's okay, because hopefully we did our job to make them better, and then they'll benefit whatever organization they go to. And maybe one day they'll be a client as well. And so one day Jared may come to me and say, Dad, I think I want to leave public accounting because I've found another position that is right for me. And my question to him will be, well, okay, that's awesome. I hope that you made yourself the best you can be with the time that you spent in the profession so you can succeed later.
No, I agree with Tom. I think what is in your control to give the right career path to our employees or people, the stakeholders, I would use the word, and give the right environment, learning and all that. And because we are in open world, the society is open, the commercial world is open, so they have bound to have options which may be a better one also. We should not avoid that,
Yep.
that there cannot be better options also. And obviously everyone has his own things to achieve in personal and professional life also. But I think what is in our control is to give the best environment, best learning, and the satisfaction to our people who are working with us.
Agree, 100%.
No. So I think, Tom, moving forward, I think what I'm very interested in, the kind of speed of mergers or change transformation you have taken, as you mentioned, from 2022 to say at present. First from BKD to and DSG to Forvis, and then Forvis to Forvis. So I think I think there are a lot of learnings from you, especially from transforming that first merger to the second merger, and that too in a very short span of time.
Yeah, it was an interesting time for sure. A lot of this goes back to strategies that, whether you were BKD or DHG or Mazars back in the middle of the 2010s, we were all thinking about how do we become more national, because we felt like that as our clients were growing and changing, that we needed to adapt and evolve to best serve them. And so independently, and specifically thinking about the creation of Forvis in 2022, BKD and DHG were both having discussions in their boardrooms about how do we get larger from a revenue size, and then how do we also become more geographically relevant to get more coverage in the U.S. Because while it used to be that clients that were based in Dallas often made decisions in Dallas, today private equity may have acquired that client and decisions could be made in Charlotte or New York. And if you don't have a presence in those places, you might not be able to serve the clients at the right level. So but we also didn't want to grow just for growth's sake, right? We didn't want to merge with just anyone. It had to be the right fit. It had to be like-minded cultures. You're never going to find a firm that's exactly like you, but if you can find one that's very like-minded, then you've got a chance at succeeding. And so in 2021, literally 2 weeks before I took over as the CEO of BKD, we started talking with DHG about, well, should we consider coming together? We had known each other for years and years and years through Praxity and other alliances, and it just seemed to fit. We trusted each other. We had respect for each other. And so we said, let's look at it. And over the next year, we worked hard, and we compromised, and we made tough decisions, and we made some really good decisions. And next thing you know, June 1st, 22, we launched Forvis. And we told our partners at the time that this was a solution to creating a national platform in the US, but that one thing we needed to have was a global brand. And so it was a gateway to global. We felt like to be relevant for our clients that were international, they wanted to have some that global presence. Fortunately, we had also been friends with Mazars for a long time. They had a desire to be larger in the US. We had now created that platform. Mazars had a well-established brand globally, and so we were able to just. I think this happened a couple of months before the official launch of Forvis, we actually started talking about Forvis Mazars in the background. And so 2 years later, June 1st, 24, we launched our network. And it was a lot of change. I mean, look, we changed our brand a couple of times. We changed our logo, bought thousands and thousands of backpacks because we kept changing the brand. But we're very, very happy with what we did, because we do believe that it set us up for a lot of success. And you know, we talked a lot in our firm about a culture of being bold. And we felt like both of those were bold decisions. And sometimes bold decisions create challenges, right? You got to integrate, you got to navigate a lot of change. But if you've made the right bold decision, it sets you up to thrive going forward. And now that we're through most of our integration and most of our change, we really do feel like that we're in a spot where we can create great careers for our people, serve our clients in an unmatched way, and then set the firm up for long-term relevance and sustainability. So it's been a lot of work, and we've had a lot of great people making it happen. But here we are. We're nearly 4 years in from Forvis, and we are very, very pleased with what we've done.
I think remarkable journey and transformation is not easy. And I know the kind of open partnership model you have is not, and that's where I think my next question is, I just want to learn how you were able to convince your partners or the stakeholders in your organization, especially from BK to DSG and then Forvis to Mazars. It's not going to, I am sure it must not be easy roadmap to make them understand or convince them for this transformation.
Yeah, I mean, I don't think there's a single playbook, right? I will say it depends a lot on the culture that your leaders in your past have built. I mean, our firm goes back 100 years. You know, if you go back to our legacy firms, and there's a kind of a common theme that was always there. It was this mindset of stewardship. You know, let's take something and leave it better than you found it. And there was this concept and a saying that we have of let's make tomorrow better than today. And so if you can get that mindset, it's almost an altruistic stewardship mindset. Hey, we've had leaders that have come before us that have done great things, and they set us up for what many are successes that they couldn't have even imagined. And you almost feel a responsibility. In fact, you do feel a responsibility to do that for the next generation. You don't want to be the one that doesn't pay it forward. And so when you've got that kind of culture in your firm, when you bring truly compelling opportunities to do something pretty phenomenal. We didn't have to take on debt. We didn't have to dilute our ownership. It was something we could do on our own and still be very stable going forward, but achieve one thing we told our partners: we could achieve 2 decades worth of work with one vote by creating these two organizations. And they bought into that. I mean, I think that's where the make tomorrow then better than today mindset really showed itself. Our partners like, yeah, this is going to be hard, but it's going to be better once we get over the integration. And now, you know, I go walk around our offices, and people are very, very, you know, they're proud of their brand. They're proud that they were on the ground floor of launching this global organization, and they think they're having fun. And so it's been worth it.
I appreciate it, Tom. So I think the kind of society like US and India being democratic is not easy to bring all the people or the stakeholder into one decision. So I think really remarkable on your part and your team who is able to get this democracy work also and make them agree also. So I think
No doubt.
moving on, Tom. So what do you think this new force of Forvis and Forvis Mazars can bring value to your stakeholders, which are primarily your employees and your client?
Yeah, you know, it's a lot of things. So, you know, we oftentimes think of this as, you know, what can it do for our people? What can it do for our clients? What can it do for our partners, and to our ability to invest into the future? I think for our people, you know, it just more scale created more opportunities. It opened up the population of clients that they're able to work with. It opened up many opportunities for people to continue to work with our firm, but in a different location. I mean, we've got nearly 80 locations in the US now, and it opened up the ability for them to experience global opportunities. We've got a number of folks in what we call our Compass program, where they're working outside the U.S. and those from outside the U.S. are coming into the U.S. to just experience new things. We've been able to invest in lots of new learning and development and training opportunities. So it's just been good for our people. And oh, by the way, they have the recognition and what I might say the resume permission of working with a top 10 global firm. And I think that
Yeah.
means a lot to them. I mean, they're proud of it, and they should be. I'm proud of it. For our
Yeah.
clients, we felt like that it would enable us to serve our clients better through, our ability to attract even better people as we became more significant and relevant. We felt like it was a way for us to bring what we term our unmatched client experience. You can see the book back there behind me. It's really how it's a book written to ourselves on how we treat our clients, both internal and external. And we felt like that a bigger platform, dare I say, a global platform delivering UCX could be really impactful. And then even when it gets to our ability to invest, I mean, we're now a $5+ billion organization, and we have a $5 billion financial statement that we can use to invest in AI and new technologies and common platforms, and that ends up benefiting our clients. And then, when you think about our partners, you also have the ability to win more work. I think as we've become this organization of Forvis Mazars, the permission to work with clients is enhanced, which helps our partners have very successful careers. And it allows us to operate very efficiently. It allows us to continue to be excellent in the way that we run our operations. And so when you put it all together, if you've got a solution that's better for your people, that's better for your clients, better for your partners, then I think you've got a winner. And that's the types of things that we're trying to do. I mean, I love the way that we can invest now, both domestically and across the globe, to bring new resources, to expand to new geographies, to build new tools, which all benefit those three constituencies, right? I mean, our people get to use those tools, the clients get to experience them, and the partners get to leverage that investment across a big platform, which helps us do even more.
No, I think you're right, Tom. Uh, just being an industry expert and unbiased, my view is that I think you have taken a very right decision, especially in 2024 when you decided. Obviously, you started discussing before that, but your timing
Yeah.
was right because after that, now we are going to discuss the kind of changes that are happening in our profession. I think it stands you to overcome the challenges which are we are going to discuss, bringing to in our profession also. I think the timing was very right.
Yeah, and look, there's the entrance to private equity and other alternative practice structures in our profession probably started a little bit before
Yeah,
Forvis
2023.
Mazars, but it was certainly, about the time we were starting Forvis. And, as we thought about it, creating Forvis Mazars was to a degree our answer to a very dynamic professional landscape. Could we have chosen to go a different route, to take on a sponsor, private equity, do an ESOP, go public? I mean, all those things are options. They're still options for us. What we've done is we have worked very, very hard to understand both the benefits and drawbacks to different structures. And to be clear, every structure has benefits and drawbacks. Our job is to assess those, look at that relative to our firm, and make the choice that's right for us. And for us, we decided, for multiple reasons, that we felt like continuing with the partnership model, being partner owned and partner led, and kind of we call it holding on to our key. We believe our key is our ability to be successful in the future, and so let's hold on to our keys so that we can drive our vehicle. And I understand very much why other firms have chosen a different route, and I respect their choices. I think that for many firms, it is the right answer. It's just not the right one for us. And, when we think about private equity in particular, I mean, we work with thousands of private equity related clients. We think they have done a phenomenal job in many industries, and they've helped our profession out as well. But not every company sees that as their right pathway, and it just happens to not be the right one for us. So, it's it's probably our desire to be able to make investments that aren't quite dependent upon a specific horizon. It's maintaining flexibility and the ability to have the say so of what goes on in the firm is really important to our partners. And so as they think about different options, those were very important. While there can be other real benefits that come from choosing a sponsor. So you just got to pick your choice and then you got to try to optimize it. And that's what we're going to do.
No, I think right. Obviously, Tom, you rightly said every partner or a firm of partner has his own decision to make. It's not about what is better, right or wrong, or better or not better. I think that everyone has to take the partner or the firm has to decide upon based on their interests, their business objectives, and their comfort zone also from the point of view
Right.
of doing the business. That's more important also. So, what,
Yep.
Tom, just leaving from a Forvis point of view, from an industry point of view, what do you think the kind of landscape that these all models are being evolved? Like obviously, one is peak model, peak driven investments where they are acquiring a majority stake in a lot of firms, especially to started with 2023. I think it picked up very well in 24 and 25. So a lot of, and I am the kind of voices I'm hearing from people who have not yet got, they are also in the line. That's what I'm listening also, but not confirmed, but that's the word. And plus, obviously, there's another leg of options I have seen, like Ps are consolidating smaller firm as a network structure
Yep.
rather than a ownership like of Ascent and Crate. And then obviously we know about BDO, debt funding and ESOP. They are facing challenge, but nevertheless. So how do you see this big picture in terms of the various options are going in and the time tested, the traditional partnership model? So what do you see the future of our profession? Not from Fabrice point of view, as an industry, how do you see it is maybe after 5 years,
Yeah.
10 years?
It's going to be really interesting to see, because you've got so many different players involved now in the profession than what you used to have. And I don't know that I've got a crystal ball. I will say this. I think that by bringing in some of the more focused management acumen that has come from private equity, in many ways, our profession is becoming better operators. We always felt like we have done a nice job of taking care of our business. And as we've acquired other firms from time to time, we've really been able to bring some of our operational acumen to help them improve their operations. We see that happening across the profession. So from to some degree, it's going to make our firms operate better, which is good because it sets us up for change better. It sets us up for the ability to invest better. And so that could be really, really good. That what we don't know is how will all of the forecasts that have been done on the sponsor-backed organizations play out. If they play out as forecast, it's going to be phenomenal for many of the partners and the next gen partners that are part of those firms. If it doesn't play out, then there's going to be some headwinds, and that's just business. Sometimes forecasts work, sometimes they work for some and not for others, and so we'll need to see where that goes. We're starting to see some of the private equity owned organizations really pivot to an IPO or going public as their exit strategy. You see a number that are really working to get enough scale for that to make sense on the market. That impacts for firms like us that are sticking with a partnership model, probably an interesting dynamic of it becomes hard to acquire other firms because the valuations that like the roll-up firms that you mentioned, they'll pay more money than probably what makes sense to us because we're going to hang on to that thing for years and years and years. So we gotta be able to absorb whatever debt it would take to do that, and we're not going to just sell it or flip it to the public market. So it causes firms like us to think about, well, do we acquire or do we Do we grow more through greenfielding, through just planting a flag in a new market? We recently announced in Forvis Mazars that we did that in Minneapolis. And, so we're now building a team from scratch there versus trying to acquire a firm. It takes a little bit longer.
Yeah.
If you do it the right way, you probably can build your own firm culture more quickly because there's not the level of assimilation, but it changes your strategy. I think, when you hear a lot about the sponsor-backed firms, they talk about investments in technology. So we watch that closely. Are they investing in things that we're not? Are they figuring things out that we haven't? We're confident in our ability to invest. We do not feel constrained at all about our ability to invest. And so while that could be something that a sponsor can bring to a firm, we feel like the way we've run and managed our firm, that's not a compelling reason for us to do it. But we can't get complacent and lazy. I mean, look, there's some smart people that are part of these firms now, and they're going to continue to push the envelope on driving excellence, and we got to do the same. So, if there was an area that I just want to make sure we watch, it's ensuring that the next generation of people coming into the profession have the same opportunities that those that are in the kind of the senior levels of the profession have today. And so I think as leaders of our firms, whether we're sponsor backed or whether we're partner owned, we've got to make sure that we don't overburden our firms in the future to the extent that the next generation can't have success, because if that goes away, then I worry about people wanting to do this job in the future. And so no matter what you choose, just make sure that you're keeping the ability of the next generation to have success as well in your line of sight, because that's what makes yourself a sustainable organization.
That's true, Tom. Otherwise, you or me, myself have seen, if there was there was a clear roadmap or expectation was that we can always be there at the top. We don't want to or our interest, but if there is a first day, if there is no foreseeing or there is no chance of being at the top, you being at the attracting the talent is going to become a big challenge.
Agree. We'll have to continue to watch that. Luckily, we're seeing the pipeline pick up in the U.S. For a while it was really a challenge, but I saw a report this week, I think, that in the U.S. at least for the third year in a row, the number of accounting students are increasing. So I think that's the stability of our profession. It's always been there. I think it will be there. It's going to change, but
Yeah.
it's predictable, and so people in times of uncertainty often like that predictable career, and we've got to continue to bring that to them.
Yeah, true. I think that's where we have to work together, obviously. That's where I think I was speaking with someone and then I said the same thing. From a point of view of attracting the talent, I think I said we as a firm or a professional have to take a collective effort. And for attracting the young talent, it could be their salary increments, increases, work culture, or whatever the best thing we have to do. I think it has to be done by us collectively to try. Because, say, example, if Tom and Kunal is only doing, but others are not doing, we have a limited reach out to the young people. We can't be
Yeah,
there everywhere. So I,
exactly.
that's where ecosystem has to work together to track the talent. I think that's going to be a big challenge considering the new Gen Z people.
Yeah, for sure. But I mean, I'm actually pretty hopeful. I mean, look, people have been since the beginning of time have been talking about, well, I don't know if this next generation is going to want to work like we have. I mean, and there's example that going Socrates, for example, Plato one said that. So we just have to learn you have to adapt, we have to evolve. And I think we have to really be bullish about our profession. I mean, so many times I hear people talk about how much work we have to do and the hours and so forth. And unfortunately, they don't talk a lot about the clients we get to help and the growth that we get to have and the for many of us is the financial success that you get to enjoy across a very, very broad base. I mean, if you come into this profession, you can have a great financial outcome in your career. There's no doubt. So let's make sure that we continue to promote that. I mean, I think, the way that we can bring trust to our economy, that's a big part of what we do. Talk about, people say, what's the purpose of our profession? It's to deliver trust. I mean, people want to rely on what we tell them. And I think there's not much of a higher purpose than that. If you are a trust maker, then you can really, really make a difference. And so let's go in and promote that.
Yeah, I think you are right. I always say to my team and otherwise also in my discussion that we are in the business of trust and relationship. If you ask me, if I ask a lot of big four people, or maybe as a part of discussion, can you explain me what is the difference between among the big fours? Just be they being the top at the industry. So I think that the only difference is someone has better relationship and trust with the relevant client. That's where they have a big number. I think other things are very smaller because that's a foundation, and obviously rest is scale and size and a lot of other things.
Yeah, without a doubt.
So Tom, on PE point of view, just to conclude on that point of view, I think 2 point of view, two takeaways or 2 points which I thought I'll share with you. I was discussing with someone who said that last 3 years, say starting 2023 till now, till December, say to end of 2025, almost $50 billion has been invested. Not an official figure, that's an estimated. And
Yeah.
someone who has worked very closely on these deals. So that's was the person who told me, and he said he expected the same amount to be invested in next 3 to 5 years. So that's the kind of money has been put into that.
That's a lot. I mean, it's interesting if you go back and add it up, it's feasible or plausible for sure. And
Yeah.
hey, talk about getting people to want to come into our profession. People wouldn't be investing that kind of money in our profession if they weren't confident in its future. I mean, look, people talk about is AI going to wipe out accountants? No, I don't think they are. We can talk about that. And if people thought they were, then that kind of money would be coming in. So we've got to evolve. We got to adapt. We've got to make sure that we continue to add value. But we're set up for that, whether it's AI or anything else. I think we've got a very, very positive future across the world when it comes to being an accountant.
No, I agree with you. When someone is investing, is going to invest $100 billion, and obviously that's only one market. So it
Yeah.
shows the potential of that business. Challenges are different, but there is a potential. I would say that number is there. Tom, just to share, I think obviously, I think as I think me and you are on one side from a point of view of the kind of challenges the P can bring on. Just without naming the firm, and therefore that firm was one of the among the top first three who got the P investment also. And I was speaking with the founder, and now obviously that partner has retired. So he was sharing a lot of challenges and other things which are their firm is facing now. Obviously, he's out of it. But I think that's I think we expected, and let's see how it goes. But I think the firms are facing challenges also at the same time.
Well, look, it would be unrealistic to think that someone will invest the type of money that they are. I mean, you referenced $50 billion. I mean, so they're whatever the number is, people
Yeah,
are putting money into these firms. And if you're
yeah,
an investor, whether it's into our profession or anything else, you expect to have some influence at that point.
yeah,
So,
yeah,
I mean, I think clearly the influence that comes from sponsors, sometimes it's just new ways of doing things. It's, oh, they want to look at something this way or that way. Sometimes we're bringing ideas. Sometimes we're bringing speed to the action. I mean, I've heard all these different things from my peers that are now working in firms that have chosen that pathway. They're navigating it fine. I mean, clearly they're going through change. We opted to go through a little bit different kind of change. So I mean, all of us are evolving to try to be successful, right? So, yeah, it doesn't come without expectations. And you get the right investor, those expectations could really pay dividends over time. So again, if that's a choice that you make, then you've now got to push that forward and adapt. We've made a choice to become Forvis Mazars. Lots of change for our people, from leaders all the way down. We're adapting too. I see. So I think maybe the common thread there is, if you're just standing still, it's going to be very, very hard to succeed going forward. The profession is moving, and so you can choose a different path. You can choose sponsor-backed, PE, ESOP, partner-owned, but you've got to continue to adapt and evolve. There's a phrase that sometimes you hear in the U.S.: if you're not growing, you're dying. And I think that's similar. I mean, you've got to continue to grow. You've got to continue to invest, no matter what you choose. And so we're working hard to try to make sure we're doing that and that we're making the right decisions.
No, I think Tom, I agree. And I think I'm sure you may have the same view also. I think you were mentioning also. So the challenge in a profession, as I think, as mentioned, that we are in the business of trust. So even I got the money, or say I got a money, I hire the team. The client will not come in first day or first year. It will take its own course of time and all that. Say it may happen in third year, fourth year, in terms of return on investment from a P perspective. But P had that kind of patience to wait for that. And it may not happen also, because money doesn't bring the client. That's the challenge in our profession also.
It doesn't. And so you're right. I think that you will see the PE sponsors take a reasonable period view of, hey, we've got to start investing now to get return later. That will come with expectations. Hey, in order to get that ROI, these are the things that we want to happen. I was recently at an AI CPA major firms group, and the constant theme at this meeting was one of accountability. We've got to have people that are accountable to the expectations that are being set for them, whether it's the way that they grow, the way that they develop work, the way that they manage their accounts receivable and unbilled WIP. I mean, all those things come into play. I actually feel like, I'll brag on our legacy leaders. They did a really good job of instilling a mindset of accountability in our firm years and years ago. And so, hopefully that means that we can compete very well, and also get the same type of ROI that these other firms. I mean, it all goes back to, even if you were leading the pack a little bit, if the other folks catch up to you, you can find yourself behind unless you make yourself get even better. So when I talk to our partners, I'm like, hey, we can't be complacent. We've been pretty good. I mean, we can look at our results. We've been pretty good. But if we take our foot off the gas, and if we get complacent, we'll get passed by. So we have to hustle. We have to make sure that we're holding ourselves and each other accountable, and then trust that we've built the platform for success. And I think luckily we see that time and again, that we don't win every proposal we put out there, but we sure do win a lot of them. And that helps build that confidence and courage that we're doing the right thing.
No, I agree with you, Tom. You are right. I think we have to evolve. We have to be on the toes, and we don't take the competition lightly. Take it seriously,
Yeah,
whatever the way it is, to our
exactly.
liking or not liking. You can't do anything. So,
Right.
Tom, just moving on, just to have your thoughts. Like, for example, not just from a P perspective, this CPA firms, or there are other tax firms who are going for a listing also. Recently, Anderson Tax has got listed, and there are some smaller firms who have got listed in UK also. So, how do you think whether we as an accounting firm can meet the expectation of a public listed company or not? What is your view on that?
It's an interesting one. There's been a public firm in the U.S. for years now, in
CBD.
CBIZ,
Yeah.
and I think they've done just fine being a public company. we watch that. We look for things that they might be doing that we're not, and things we can learn. And so we clearly are curious. I don't know. I mean, I talked to a number of investment bankers that would, look, it's not like we don't get calls all the time, like, hey, would you like
Yeah,
to consider this type of arrangement? And so we ask questions, and the financial specialist would tell you, hey, there's an appetite for professional services firms in the public market. So I think you'll see more of these. I'm not smart enough to know how it's going to work out. I mean, it's going to depend a little bit on how well those listings go. It's going to depend a little bit on, will do regulators look differently at those types of firms versus traditional? I just don't know.
yeah.
I feel like there'll be some very successful ones, frankly. I don't think there'll be any more successful than we can be, but I think that you'll see some people thrive in that world. So it again goes back to, not every partner-owned firm is awesome. Not every sponsor-backed firm will be awesome. There's going to be some people that are awesome firms and some that are just okay. And you'll see that play out. There'll be some firms that go public that have a lot of success. There'll be some firms that go public that don't. There'll be some firms that stay partner-owned that'll be phenomenally run, and there'll be others that aren't. And so I try to take that like it's interesting, and I need to know from a leadership and strategy perspective. But at the end of the day, I got to make sure that our firm and our partners are doing what we need to do to execute our strategy to succeed, and not let some of the noise that may be out there get in the
Yeah.
way of doing what we need to do. So it'll be fun to be a spectator and watch some of that. And as a leader of the firm, I mean, it's a new challenge. Like, okay, how do we go out and compete? And obviously we want to win. So how can we be winners in this new environment?
I think you are right, Tom. I think that's what I do. Let's learn from these first movers, and if we and in the future, if we have to go that path, that we have a lot of learnings to execute that path also. Why did we want to go there? So because I was speaking with one of the very large US tax firm who obviously has a clear path of going for a listing and all that. So I was always discussing what is the roadmap and all that. So I think one of the challenge he was mentioning to go to the listing is the forecasting. Every quarter there has to be forecasting, the results to be public and all that. For that, the ecosystem and everything has to be right so that we can be right in the public listing also.
Yeah. Well, and that goes back to every choice you make comes with expectations. If you're
Yeah.
going to be publicly traded in the US, then I mean, it's a level of rigor in your financial operations and in your controls that frankly many
Uh,
partnerships just don't have. I mean, you don't have to. I mean, some of this is, you're now publicly listed. You have a responsibility to the public at large. We have a responsibility to our partners and stakeholders too, but it's not as regulated. And so when you get into that regulated environment, sure, expectations are going to go up. So will that change the way that some of these partners that are in firms that are going to seek that type of listing, the way that their work is impacted day to day? I think it will, because that's just what the regulators will tell you have to do. And then you just hope that the extra effort is worth the extra gain, and that's what they're going to really seek out when they go to the market, is make sure that all that the drawbacks of the extra rigor and effort are worth the benefits of the public float.
No, I think you are right. I think one of the challenge I foresee is the revenue, meeting the revenue targets and all that. Because otherwise, if you are not public listed, if say example, I have a revenue in September, for some reason I'm not able to book it, I can always defer to the second, say the next quarter. Being a listed company, if there is that amount is material, then I have a lot of pressure to achieve to get that revenue accounted for. So these are small example. I think there are a lot of
Yeah,
when you are taking money, public money, you become accountable. You have other stakeholder on the top of it. You also.
without a doubt. And hey, every other public company has that types of pressure. So it's not a surprise that they would expect the same from a publicly listed CPA firm. So again, you work hard to understand the pros and cons of the choices that you're going to make, and whether that's a pro or a con. And I'm not going to weigh off on that. It's just you're going to have to go through that level of rigor, and so be ready for it if that's the path you go down.
No,
And
I
some of
agree
that's
with you.
probably good. I mean, hey, it certainly focuses you and causes you to not become complacent, which again, I think elevates the profession overall.
No, I think right. I think as a open society, the changes has to be there, and some new things should happen so that we are moving as an society also, and as a profession also. So, Tom, if you can put a forecast hat for, say, what do you see, say, next after 5 years, the landscape of the top 25 US firm, how do you see it? The landscape is going to be there from here to next 5 years, if you can forecast.
Yeah, boy, if you had asked me that 5 years ago, I would have not done very well on my prediction, because it certainly changed a lot more than I probably would have predicted. So I'm not. It's hard to know. I think you'll continue to see uh, firms consolidate to get larger. I think there'll be a few firms that stay committed to the partnership model. That's what our plan is. There'll be others that are maybe owned by separate private equity firms that come together. There'll be, I think, clearly some more firms that have gone down the IPO route. I think that's really where the strategy is taking them. But that's just the way that firms are organized, right? And at the end of the day, we're all going to end up operating at the same way. So then it's what's it going to be like being in a firm? I think we'll be doing a few things much differently. I think, artificial intelligence, while we're still trying to figure out exactly how it impacts us, it will. It should make us more efficient. It will cause us to think a little bit more about how we bill for the value that we bring versus the hours that we spend, and making sure we can articulate that value to our clients. It's going to be important that we focus on the margin that we're developing, so that we can continue to invest in the future. And just things will be changing rapidly. But I also don't think that we're at risk of becoming antiquated. You go back to, and I heard a speaker use this analogy, so I'm going to borrow it. It was Marcy Rosell at the AICPA Major Firms Group, and I love this analogy. She said, when you look at AI, you have to ask yourself, is it a tractor or is it a spreadsheet? And if you go back to agriculture, when the tractor came in, suddenly a lot, especially in the US, a lot of those folks that used to be behind horses or cows with a plow that were working in agriculture were now replaced by a machine, and those jobs just went away. And now they're all, probably working in finance somewhere. But it was really, really a drastic impact on that industry in agriculture. Now look at a spreadsheet. I mean, when spreadsheets came in, in the late 80s, early 90s, when they really became popular, they didn't eradicate CPAs, right? They made us work differently. They made us work better. It took a lot of the routine stuff out of our day and allowed us to add more value quickly. I think that's where we're going. I think that AI is a very, very impactful spreadsheet. I think you're going to have to learn to use AI. You're going to have to learn to invest in it. You're going to have to learn to let it's going to be less important about what you know in the future and more important about how you apply that knowledge and bring value. And so for so long, I think we've been able to also capitalize on what we know. Well, AI is gonna democratize that, right? You can just put it in AI and you're gonna know. But now can we take what everybody knows and say, but here's how we apply it. Here's what it means. And so that's where we're going to have our profession continue to evolve. Add value, bring a purpose to everything there, add trust, validate the information, and then help people apply it to unlock their potential. That's where we'll need to get to over the next 5 years.
No, I agree with you, Tom. I think you are right. Although we'll have more discussion on that, but before that, I have obviously wanted to, based on the kind of experience you have, And you have seen this traditional partnership model over the years. And what do you, I think, from just concentrating on this model, traditional model, what do you think, not from Forvis point of view, from generic point of view, what do you think we can bring changes in this model which can attract the young talent also, and it can balance out the senior or the other partners also? Because I think that's where the struggle is also there. Ignoring this all what has happened from P and other perspective, there's always, I think, challenges or discussion about the model and other things also, because that's where the important aspect is also lie. Just I
Yeah,
thought that will be relevant for us to learn based on your experience.
yeah, it's a good question, and part of the challenge is I don't have insight into how younger professionals in the other models, how, what they're being told and explained, and so I can tell you what we tell our people. Okay, maybe that's the best thing I can do.
Yeah, yeah, that's it.
One, I mean, don't feel like that we're unable to invest, that we're falling behind, because we're not. I mean, that is clear. So we are investing and growing and adopting AI just like everybody else. So I think that's important. You're not falling behind. What we like to tell our people is that, look, you have the ability to have the same type of professional outcome and success that the partners that you're working for have. There's not a different path for you than what those individuals experience coming up. And if you value that kind of more traditional role, that you can have, the same types of benefits and opportunities that the partners you're working for have had, then we can bring that to you. If you want, if it's more, hey, I really want to understand fair market value and stock options and all of that, which is just some people very compelling, then there's other platforms that'll bring that to you. What we can bring to you is a time-tested, proven approach in a firm that, if it's very well run, can be very successful, and you can be part of that. And so, hey, it probably can sound traditional, which is fine. I think it is. It's also one that we've got a legacy of 100 years, and it's happened time and time and time again. So, I don't know if it's not broke, don't fix it type of a mindset, but it's clearly, hey, we think we've got advantages that will help you succeed, and so cast your lot with us, and we'll help you get there. And I think as we look at our younger people, that's compelling to them. They like to know that, hey, you can walk along the same path that I did, and experience the same things. And if you like what you see, then that can be yours in the future.
No, I think, Tom, you are right. Once the model which has been time tested and been working very rightly, it has to be continued. Obviously, with the change of time and everything, if certain tweaks are required just to readjust to the timing, the change of time or change of expectation, it can be done, but it can't be rewritten again.
Yep, agree.
So, Tom, not to continue our discussion, I think, as you rightly said, giving by example of the tractor and the farmer and all that is concerned, I think you are right. So, what do you think is, from a client, from our business model perspective, it can have impact? Rather, what are you saying? It will bring more efficiencies, productivity gain to us from a business perspective, or at the same time it will take away some revenue because of the kind of automation will help, the automation will help in spending less time on the work.
Well, it's a little bit of everything, right? So let's go back to when I started my career. We mentioned back 91, 92. I mean, I would manually key in a trial balance into software, right?
Yeah.
I mean, literally, we'd take 2 days to key that thing in
Yeah.
and then hope that it balanced, right? And so a few years later, you hit a button and it imported automatically. So there's days and days and days of time that went away.
Yeah.
And it wasn't like we quit doing audits or we quit hiring people when that happened. We just said, well, now you can go do something that's actually valuable. And because keying in the spreadsheet wasn't terribly valuable for the client, it was just required. So you fast forward to AI, it's kind of like that at 1,000 miles an hour. We've got
Yeah.
all these things that we've been having to do in the past that now can be done like that. So we should be more productive for sure. We should be able to move more quickly to work that truly matters and adds value versus work that kind of has to be done, because AI is going to do the stuff that has to be done, the matching and the validation and stuff. I mean, all that should be automated in the future, and we spend a lot of time doing that as individuals today, and that's okay, because the value isn't did it match or not. The value is, did it not match and why, and what does that tell you about controls or a tax return and a tax outcome? And that's okay. I mean, I think if I'm a young professional right now, I'm excited because I get to doing the value add work far quicker, because AI is going to take some of the less value add work and just automate it. So
Yeah.
that means that the hours that we may have to spend on an engagement will go down. It doesn't mean that the value we bring will be different, and that's where we've got to make sure that we continue to work with our clients to help them understand that the value and the trust that we're bringing, and reorient our profession a little bit from a time and materials to a value provided type outcome when it comes to how we continue to have our revenue models going forward. But it'll
No,
be fun. If I'm a young person, I love it because that means I get to have fun quicker.
yeah. There will be no requirement to do all this manual work. It will be more value added and advisory work and all that. I think,
Yep,
Tom,
exactly.
you rightly mentioned, as you mentioned about from time spent to a value contract. I think I'm obviously being eager to learn, see how this transformation or is going to have impact. So I was listening to a lot of CEOs of large service companies, especially software industry, where the revenue model has been based on the time spent and all that. I think what they are evolving from a perspective is that from a time spent model, now they are getting into a new business model on an outcome base or a value based outcome. So no more time based contracts, output based, value based contract. They are getting into that. I think that's where I think we obviously our profession also was a mix of output and time based. I think now it is going to be purely based on outcome only or value.
Yeah,
Into the-
I can see where we get there. That was a big topic of discussion at our recent AI CPA meeting. I don't think we're there yet. I think there's still going to be a
Uh,
mix of kind of the technology value add and the hours based value add. But over time, it will be a different approach. And if I'm a client, I like that because that means that the professionals that you're hiring are truly focusing on bringing that value,
yeah.
and that should mean that our clients get an even better product from us than what they're getting today. Which, hey, that's just the evolution of the industry and things getting better, just like we've seen in internet services or web browsers or cars. I mean, they've just evolved and now they're probably better than ever.
No, I think you're right. So, Tom, if obviously, I think we have to see how it evolves. Is too early as this stage from a point of view. What from a business impact point of view, do you see any challenge which AI can create? And we should be
Well,
ready for
yeah,
that.
I do. I think it's in the early days. I think that you've got to really, from an operations perspective, you've got to understand, the better understand the margins in your business. We're investing lots and lots of money in technology, which is going to take hours out of the work that we do, but it doesn't necessarily lower the cost because you're spending that on the technology
Yeah.
side. So understanding how all of that fits together is a big impact. I think there'll be look, there'll be a competitive impact as some firms figure out how to do things more efficiently. They may become more competitive on pricing, and I think we'll have to, as a profession, just make sure that we don't harm ourselves by failing to monetize some of the efficiency that we're investing in. And I think every other business does that, right? They try to get more efficient to drive their margins higher because that's to the benefit of their stakeholders. And we've got to do the same thing. Our fees may stay flat, but our margins may go up, and that'll be okay because we're able to translate that into a meaningful bottom line. And and when I say bottom line, I don't necessarily mean what we pay to our partners. I mean, yes, for sure, there's part of that, but it's also the money we didn't have to invest in the next generation of technology, because we have to have that profit to continue to invest to stay relevant. And nothing's static, right? So it's clearly about making your firm strong for the duration, and making sure you protect your financial stability so that you're here a decade, 2 decades, 100 years from now.
No, I think, Tom, you are right. I think my assessment say the firms which are focused on more value-added services to client than the manual or very traditional will face less challenge. The challenge will be for them who are more on low value-added work. I think their work is going to face challenge. Obviously, even the firm who is doing value-added work will have impact, but as you rightly said, even they have impact on revenue, but they will have better margins and better profitability over a period than otherwise lower margins and lower profitability. That's my
Yeah.
take on this also, but let's see how it goes.
It's going to take discipline, right? And
Yeah.
it'll take helping our clients continue to understand and appreciate the value that we bring. So we'll have work to do as a profession over the next 5 years to make sure that we keep ourselves financially stable.
No, I think right. I think just to what I fear or feel challenge the AI can create. Obviously, what we discuss is a path we will evolve over a period of time. I think what I fear is that maybe some technology guy is going to come with a product and he's going to disrupt our services. That's the maximum fear I have. That's why I'm seeing examples also, and which is making me more focus on that it may happen also. Just to give you two example, Tom, there is a ERP startup, Dual Entry. They just started 2 years back only. Last round they were around $500 million, and they have come up with an ERP which can they make them live in 2 days, and the target is mid segment market. And if I believe, and they are giving on writing, if I believe they are saying it will be live in 2 days, and I know a lot of, especially the large consulting firms, and they do a lot of ERP implementation consulting work. Suddenly they are making irrelevant them.
It's a risk, right? And look, there's been, no matter the industry, so let's just step away from our profession. I mean, evolutions in technology have caused companies to go out of business for a long time. So it's a question of, are you evolving and adapting to the changes, or are you saying, well, that's what I do, and now that it's been automated, I'm going to disappear? I mean, I look at some of the most successful companies in the US that started out as one thing, and today they're doing almost something completely different because they could read the trends, and they said, well, okay, if we keep doing what we're doing, it'll be fine for a little bit, but then we're going to be completely irrelevant. So we've got to move to doing something else. So if you're dealing with that ERP type platform in your daily consulting work, well, you better figure out what you're going to do when that's automated. And that requires vision, that requires a little bit of, you got to be brave and encourage, and do you truly believe that you can add value? I mean, so, okay, well, now I can't do whatever that ERP system is going to do, but what the ERP system can't do is this. And because I understand this, I can now bring my knowledge and insight and analytical skills to the next thing. And that's going to require a lot of adaptability,
Yeah.
or you'll become a dinosaur and disappear, right? So I don't doubt that, but that's been happening for centuries. And
Yeah.
so we shouldn't be surprised when it happens again, but it can be scary because we get comfortable in the way things always have been. And I think as leaders in our firms, we have to continue to say, work for a while, but now we gotta move to the next iteration, which is fill in the blank, whatever that needs to be.
I think, Tom, you will agree with me. The kind of disruption, technology disruption you were mentioning, I think we were lucky that such disruption has not happened to our business model and our services. And I fear this is going to happen for the first time. That's where I think I have a fear that I have fear about more this than any other aspect is concerned. Just to give you a last example, there is legal AI named Harvard.ai. These are the two founders, just 24, 25 years old. They're based out of California only. Started 2 years, 3 years back. They built some AI tool for legal fraternity or legal services are concerned. And the last round, they got a value of $5 billion just 2 months back. So that's the
Yeah,
kind of
yeah,
the
that's
product they are
that's
evolving.
so if you're an attorney that is doing very basic level stuff, basic wills, basic contracts, which is I don't know exactly what that company does, but that's some
Yeah,
of what I see. That's going to be harder to make your money at. If you're an attorney doing complex litigation and arguing in front of a jury, you're probably pretty safe. So how do you move away from the basic stuff to the high value stuff is going to be the same thing. It's disruption's coming. I mean, is it a fear or is it just, hey, it's an opportunity? And I think if we let fear slip into ourselves a little bit, we'll just kind of get stuck. And you can't stop it. It's going to happen. So then you better put on your sunglasses and then start walking toward wherever you're going because you got to change. And I think we can do that optimistically. I think you got to be innovative. You got to challenge yourself. You got to think of new ways to solve your clients' complex problems, and then stay one step ahead because what is new today will be automated in the future. It's just the way it works, and so continue to reinvent what's new.
no, I think you are right. I think there's no point to fear also, and not which is beyond your control and you can't control. The only thing I think what we can do as a professional, as a part of or the firm providing services is to just day and out think of creating value, providing value to our client. I think that's the only going to survive us. That's the only way I think so.
Agreed.
So, Tom, just to conclude on this AI point, what do you, based on your experience and what you are seeing for the future, so what one guidance or maybe recommendation you would like to give to the young professional or CPO who just started career or going to start, how they should now look
Yeah,
into
I
this?
think it's. Oh, I'm sorry. I didn't. You cut out there.
No,
I
no,
thought
please,
you were
please,
done.
please, please, please.
I think if and I'll tell you what I'm talking to my son about, okay? Because it's very relevant to me
Yeah,
because I
yeah,
have a
yeah.
lot of personal interest in how he does. I'm like, well, first of all, get in there and learn everything you can.
Yeah.
Learn how to use AI, learn how take advantage of every learning opportunity that's put in front of you because and then learn how to apply that. So you can go in and you can learn how to audit loan reserves, but then what does that mean and how can you use that to understand the business? What our clients are going to pay for going forward is understanding and the ability to provide insight. They're not going to pay for, well, I know how to functionally do something because I think that's what'll be automated. So if I'm a young person coming into the profession, I've got to learn the knowledge, right? I can't outsource that to AI, but I've got to quickly move toward, hey, I've got to be a deep thinker. I've got to be able to analyze problems. I've got to start thinking about solutions versus just actions. But that's going to be fun because then you can see how the daily activities you're doing are impacting your clients going forward, and you'll differentiate yourself from others. So It's kind of like, it's interesting how similar the challenges that we're facing are, and I think that our profession is almost without borders when it comes to that. So it's an honor to be with you, and I wish you the best of success as you go forward.
No, thanks, and same to you. And I'm looking forward to meet you. If you are coming to India or I coming to US, definitely we'll have meet each other.
Sounds good. Sounds good.
Take care, Tom. Have a great day. Thank you very much.
Okay. Bye. Thank you.
Bye. Bye.